Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for a pretty wild Monday, and this was the 13th of May, 2019, and we're just after 5:15 p.m. Central Daylight Time. Therefore, the prices behind me, where you've got the boxes that are open already, this is trade that began for the Tuesday session. Got it? So you're getting some follow-through in the first trades of the evening in the stock market. Not surprising. A lot of traders probably taken back with a huge decline we had today. We saw that about 4:30 or so this afternoon, more details came out from our trade organization, our trade representative, Mr. Lighthizer, in a filing as for the $300 billion that we might want to put in tariffs. And I believe there's a public hearing on June 17th. Now, I don't know the earliest date. One thing I read said June 24th is the earliest the tariffs can go on, but from what I remember, you need a 60-day, maybe it's a cool-off period, whatever you want to call that, so I'm not convinced they go on right away. The important thing is the G20 meeting will be around that time. The president's going to meet, obviously, with the Chinese president, and we're going to find out what is going on. We'll find out if these two can reach a deal away from the trade reps or if the situation gets worse. It's hard to get into the Chinese mind. Are they saying to themselves, let's just live through this and get on to the next president? Maybe they're saying their economy won't be as hurt as we think it might be. Don't know. What I do know is the stock market's in a corrective mode, but each one of these corrective modes have done what? Well, first off, we're no longer in the upthrust. So I left that there to just show. That was broken. This is how the market looked on Friday, the 3rd. This is how the market looked this past Friday. Shouldn't have been an upthrust, should have been a downthrust, and you're just extending that break right now. So in a closing basis only, you have a higher high and a lower low close. It's a simple way to look at it. When I look at the chart, we've done a rollover in the chart on a daily bar chart. As you take a look here, you can see that you've got a pattern of lower highs, lower lows. That is the definition of a downtrend. Now, from there, you start filtering everything. You're looking to see bias. You're looking to see momentum, where potential numbers of support might come in and resistance. So one of the common things that people use are moving averages. Now, some people use the ones I'm using. Some use others. It doesn't matter. I'm comfortable with what I use. The 18-day average of close is if we come back, forget this break, the market pulled back and it spent 4 days in a row fighting at that number. It had already established lower highs, lower lows. This is the 200-day moving average. This is the 100. The market starts down Thursday of last week, comes back up on Friday with what I want to call a relief rally. Now, there's something very important from this. When you have an outside day up, if the market takes out the low of an outside day up, my theory, that's all it is that the market's going to try to get to the next major moving average below it or a Bollinger Band. The market in this case took this out and it's following through. Look at the 200-day average of closes. That's one of the numbers. The next chart, you were under the Bollinger Band, so it can't be in play. That's my point. You had already gotten under it, and if you took out today's low, the Bollinger Band can't be the support. It's got to be the 200-day. So it would not surprise me if the market wants to make a run to there, or even the 100-day average, to get a further washout in the market. That's an important moving average. You'll hear TV, I promise you're going to hear talk about that. When we come to the momentum of the slow stochastic, you're oversold. If this market were embedded, I'd have a different thought on it. Now, there's something else. Do you disagree that this is pretty much sideways action? I think it is. That's how I define it in the Bollinger Band. And when it broke out of it, it fought a bit, and then it accelerated on it. That's pretty much what I'm seeing. I still think these are valid support levels. We'll see if they hold up. The NASDAQ, same pattern. Pretty much. If we take a look at Friday's action, outside day up, if you take that out, I would not be surprised that you make a run to the closest of moving averages. We'll see if we get there. When we come over to the Dow, this is Friday. You went down first. Now remember, this market's doing it ahead of the other indices, I guess, because it hit the 200-day, got to bounce back in to the Bollinger Band. And if you take that out, the only next number of potential supports, the 100-day average, that's where you're at right now. Is there anything bullish on these charts? Other than them being oversold, there isn't. But they're very oversold. These are the first sizable corrections that we've had in a while. Overall, maybe 5% of the gain. So it's taken back 25% in some cases of what they've made for this run-up. What about the Russell? Let's go back. This has been a different looking chart, but here you are. Outside day up. If you take out this low, here's the 200-day. It can't be the 200-day. That's why it's a little stranger looking. Only the 100-day average could be the next support, and that's what you're down to as we're talking. Is that reason to buy the market? No, but it might be plenty of reason for shorts to cover these markets at these numbers. In the VIX, today, I told traders, I think the pros are coming back in today and selling calls against the upside of this VIX. It's not a recommendation, but this rally's already occurred, and now I think the market's looking at that. Obviously, whenever you write a call, you got to be careful because they're thinner than the regular contracts of futures. But in looking at it, flat momentum, the trend is up. Market's been fighting this battle here for 4 days in a row. If it drops from here, the first support's the 100-day average at 1688 because it's over the 18, but the ultimate support might be that 18 at 1482. Could it just run up? Yes. But each time in the past that this VIX has gotten upwards here, it has proven to be one of these markets that I see the writers of them coming in. I think it's been much easier to write puts when you're down here, because taking a market from 12, like you just did this market, you went from 12 up to 20, take it from 12 down the same amount of points, it doesn't work that way. It's a much harder game. In the T-bond market, this is called running the Bollinger Band. And it's a market that, if we take a look back, we were going somewhat sideways. We started pushing on that band. We got ourselves overbought. The market then established higher lows, higher highs. This is May 10th, so I don't want to give you the impression it's that far ago. And you're still getting the buying in the market, and it's continuing tonight, but the market's not trying to extend and just run away over that upper Bollinger Band. It's still very bullish. It is still a market that is overbought as well. So until it's over, it's not over. Buying the upper Bollinger Band, I'll let you decide to do that. That's something I teach not to do. 10-year notes, overbought, upper Bollinger Band in an uptrend. You see the resistance point. You get over, you come back under. It's a resistance. The key is there any reason to leave that pattern? And that's been the hard thing. In TLT, it's the same bullish pattern, and it's been here for a while. Higher lows, certainly higher highs, running that number, and overbought as well. In the dollar index, the market's got lower highs, lower lows, but just recently it had a day where it was able to close underneath the 18-day average. This was on Thursday. It followed through, so that number, 97.49, as far as I'm concerned, is a very important number. Today you tried to break further to the Bollinger Band, couldn't do it. You're getting into oversold territory. If you get a Tuesday reversal, I won't be surprised if the market tries to make a run to the 18-day average and finds a battle there. In the euro, the market's got an uptrend developed. Higher lows, higher highs. Now the pullback, the question is, will it find enough support against the 18-day average, should it get there, and not break under this last break low of 112.07.5. Right now, as far as I'm concerned, this market's in an uptrend, the bias is up, and momentum is still up. In the British pound, it's a flip-flop. Miss May's party continues to lose in the elections. The calls for her to come out of office are loud and clear. You've got the lower highs, lower lows. All this rally did on Friday was come back up into the resistance from Thursday of the 100-day average in the 18. And if you get back under that low, you start another downtrend, which it did. Lower highs, lower lows. To knock the trend out, you got to take out 130.71. If the market can continue down, maybe you're going to get back to that lower Bollinger Band near 129. In the Japanese yen, if you look at their economy, it's slowing down, and yet every time there's a problem, people run to the yen as a safe haven. Can't argue with what they're doing. That's what they're doing. The trend is up. You're running the Bollinger Band. In fact, if we go back to last week and count, on this day we closed under the band. The next day we were over it. The 100-day average is the resistance, and you're overbought. This day was Wednesday of last week. We eked out and got to that 100-day average, and it stalled. And then it was able to run on Thursday. But Friday, if you take a look, the market really didn't go anywhere. It made up for it today. And the reason it didn't go anywhere is you went home, not me, but you went home as a group thinking that, that's it, things are going to get better. I am expecting the Chinese to drop the other shoe. I don't think they just say one thing and don't do it. I think that they said they were going to put tariffs on, and that's what they're going to do. That's their game. So today you got that bounce. That's in the market now. They're not going to do any more tariffs right now because we can't. So everybody's sort of stuck. So the question is this market just going to stall a little bit right here? Bitcoin, whoa, up 24% today. This is tonight. 24.9%. And I know that I've been saying I'm seeing bullish picture in this market. I've got embedded reading, and I myself surprised as can be today. But I think you're going to look back and say that those lows in December, to revisit them is going to be very, very difficult on that chart. In the Brent versus WTI crude, I would have thought this spread would have done better given the attack on the 4 ships in the Gulf. And those ships, I don't know how bad they were. I don't even know what they define as an attack. Nobody told us any damage to anything. The Iranians said, they're going to look into it. Who's causing the problem? It's certainly not them. Well, in any case, you didn't do very well in holding on to those. And if you look at the market, really got thrown back from the 18-day average of closes. The swing line is up, but prices have not been able to close over the 18-day average. They found a resistance area, and you are oversold. In the WTI, you tell me where this market went. Here you are. Look at the 18-day average. You went right to it, and bang, thrown right back with a big reversal day. Now, to get these markets friendly again, you got to take out Monday's highs, and you're not doing that early in the day Tuesday, but again, you are very oversold. I don't know how much downside risk. What I can tell you is I would not want to be short this market and see a ship sunk carrying a cargo of oil with our naval fleet anywhere near that area. I think there could be escalation of problems. In the RBOB gasoline, look at how this 18-day average is suddenly acting again as the resistance. Now, you are oversold. The market pattern, if we come back to this high right through here, that high was 2.0060. Got it? Today's rally high got you to 2.0054. It missed it, and then it collapsed from there. If you don't think the pros were defending their short position there, okay. Now in nat gas, the Chinese have said they are going to tariff. They're not going to be taking, obviously, our liquefied natural gas. Nice to have them, but the way that these type of commodities work, they move from one area to the other anyways of the world. And I think this is more of a weather market at this time of the year, and the weather is due to get good. In Chicago, we're going to be in the high 80s, they say, over this coming weekend. We're like wintertime on Mother's Day. I mean, you can't believe how cold. I think, and remember, what's here moves east. So I think this market is telling you a story. Taking out these low areas is going to be a trick in the market. You're going to have to do something unusual. Normal weather could make this market a bit friendlier. The trend is up. The bulls would have to defend this number. I am bothered as a technician. Whenever I see an overbought or oversold condition, it's one of the filters I watch, so that bothers me. I write about this and a heck of a lot more in my market research. Now, let me tell you what my research involves. I start out every day, wake up early, read like a madman, and probably by 6 o'clock, 6:15, I'm recording a morning video. I review 45 charts, 40 futures, 5 ETFs. And I'm telling you in that video, buy here, sell there. It's not as generic, and nowhere near like these that are very generic. I'm really able to say what I want to do there because you need a user ID and a password to get in. In addition, I am writing. So you get 2 written updates a day, sometimes more. Then for those that want, I even have the phone update. So at 11:30 in the morning and then again before 8 o'clock, typically, it's not every day, I'll put out an oral update to go along with those. If you haven't seen what I do, I don't want your credit card. Give it a try. Give my staff a call. They'll put you on the list. I'll get everything out to you. Or go to our website, sign up for it there. What do you have to lose? I'm not asking for any money. If you haven't tried it, I'd like to give you a free trial. I'm Ira Epstein. You have a good day.